Good morning, everybody. Hopefully we are live, having a bit of a technical test. Can everybody see me? Can everyone hear me? Before we get into the analysis. We're going to be focusing on copper again today, but I'm going to talk about gold too, because there are certain things happening in gold that you need to be aware of as an intraday trader. And then for the second part of this session, I'm going to focus on how I use Bookmap for some additional decisions intraday, because as we know, the markets are an ever evolving entity, right? So throughout the day, you might be able to spot certain things on Bookmap that might not be immediately obvious on a pure price chart. So that's something that I was talking about yesterday. Now, yesterday I was still in a little shared co-working space. Very happy to be home. I can tell you that. The chair was uncomfortable. The room was very claustrophobic. So yeah, it's very good to be back in my little den here. All right, let's have a look at this copper. So right now we've had the breakout of the initial balance range. What does that mean? It means that the price created a first hour trading range, and then for the next 30 minutes it went above it. We are staring at some single prints, but if the last sort of 10 days are anything to go by, I would be a little bit suspicious about further upside move and a gap fill, because we are in a pretty strong downtrend in general. So this is the weekly chart, very, very large time frame. And there's a sort of a speed bump demand that we're running into, but there's really not that much until we fall all the way down to 387.24. Now, this is a long-term outlook. I'm not saying that's where we're going to be like this week or next week. It's just a long-term outlook for an awareness of where we are in regards to the chart location on those massive time frames, right? Michelle Ryan says, you looked like you were in a cupboard. Yes, because that's where I was. Like the phone booths were absolutely tiny. All right, so daily chart, we have some demand here, which is visible on the weekly as well. But again, intraday, it doesn't have to mean much. So there's Asia high coming up at about 409.78. And then the profile, we're opening with a gap down. Just arriving at that supply from Asia trading. So I want to see how the price reacts around those levels. Okay, so while we're waiting for that, let's have a look at gold. Triple R wants to know, is this Ninja Trader? No, this is actually MetaTrader 5 via AMP Futures, who have real futures contracts. I think they're like one of two companies that actually have MetaTrader 5 with real futures contracts. And so what you're seeing here, all of these weird symbols like CPU24, that's CQG data. CQG is a fairly well-known futures data provider, and that's what AMP use by default, right? It's something that I've used for many years. I've said this before. I'm a bit set in my ways. All of my executions are actually on Topstep X or on Ninja, depending on what I'm doing. MetaTrader 5 kind of remains my main charting package, if you will. I'm not too keen on executing on like the same instances of the same platform, because you can always draw things, click stuff, and I've had some bad experiences in the past where I'm trying to draw something, then inadvertently I'm in a trade, and I'm like, what's happened there? So over the years, I just kind of separated those two out. And actually, back in the day, before like the electronic trading was so so popular, and before we had all of the choices, you were getting the separate charting package, and then you would have the execution platform as well. So I'm a bit old school, so I kind of maintain some of my habits that I've had from the last sort of 16 years. All right, so Bruno says it's MT4, MT5. It's not MT4. MT4 is just CFDs. So as US residents, most people are not legally allowed to trade CFDs. This is why so many Forex prop firms are in trouble, because they were offering CFD products to US residents. It's like, what are you doing? And I've actually warned against those for many years. And now here we are with a whole mess. So futures only, guys. Futures only. Futures markets are centralized, and they don't really have any spreads. So this whole issue of a prop firm in Forex that is making their spread super aggressive in order to make their trades fail, that doesn't happen in futures, you know. This is why we suggest that you do trade a properly regulated asset class, such as futures, right? All right, let's have a look at gold, because gold, I see some people asking about it. Now, gold is in rollover. So one of the reasons why I'm a little bit skeptical that we're going to get anything in gold is because yesterday we tried gold and it was just not giving momentum to either side. We need momentum, right? Even if you're in a range-bound day, you still need momentum. So right now, all I'm seeing is that we made a flimsy attempt at kind of going higher, immediately reversing. And if this is like a copy-paste from yesterday, what's going to happen is that we're going to have a few wicks here and there, and then nothing. Things might liven up for COMEX, but I'm really not seeing anything currently in gold that we can take advantage of. Copper, however, is making a nice move. There is actually a measure that I've been kind of sniffing out yesterday, because as you know, I like to use VIX, volatility index, for some of the products that I'm using to ensure that there is enough movement. I use that on DAX, I use that on crude oil, and lo and behold, there is a volatility index for copper as well. So let me find that page. Is this it? No. Okay. Here we are. Okay, so C-vol indices. Let's go to metals, because that's what we've been focusing on. Now, as you can see, we have all of these metals here. So yeah, as I'm looking at this, the highest volatility index is in silver. Sorry, I'm just going to clear my throat. I've got frogs in my throat today. Early mornings, guys. That's what happens. Okay, so this silver actually has the highest volatility out of all of the metals. It's kind of sat at 30, so maybe silver is something that we can have a look at. And then it's closely followed by copper at 27, and then platinum around 25. Now, I've observed pretty good movement every time we get into sort of 22 space in metals, and then 35 in energies such as crude oil. Every time we fall under those levels, I find that the intraday movement is sluggish, it's not consistent, and it makes everything really frustrating and slow. So we want to trade products that definitely have movement. As you can see, gold, like I looked at it I think last week, and it was still sort of around about 18. Now it's fallen down to 15. That is the rollover effect as well, because we're kind of partialing between the previous contract and the current contract. And it's all kind of rolling very slowly into December, very slowly. So it's not great for those of us who want to catch some nice kind of extended movement and not just kind of scalp for a few ticks. But Zala says, what is the tick value for copper? It is $12.50. So if you are on a 50K, that might be a little bit expensive. There is no micro copper. So that is definitely something to note. So maybe 100K or 150K would be more suitable for trading copper because it has the same tick value as ES. All right, so more single prints to the upside. Again, what am I looking for in copper? There's a couple of options. So very strong downtrend. So ideally, I don't really want to fight this. And if I look on a very low time frame, I like to look at how far away are we from overnight VWAP for London as well. That is another sort of cross-check analysis that I'm trying to do. And right now we're sort of making our way higher. But I really want to see a mean reversion trade here from somewhere. Asia high tends to be a pretty decent area. We also have settlement from yesterday's COMEX right above it. And once I do this first part of the analysis, sort of like big levels, big orientation levels that I want to look out for, then we can move on to Bookmap to see whether we can match those levels with something else. Let me just see where the average session high is. And I'm probably going to have to fall down to a lower time frame for that. Just because it's not that visible when you first... Let me see if I've changed maybe some settings here. Or am I just blind? That is also a possibility. Because we're not getting any younger. Here we go. Okay, yes. So putting it in yellow helped. So the average session range high for London, for that shortened London session, if you've been here before, you know what I'm talking about. So I basically take the open of London, which is 8 a.m. my time, and then I effectively go all the way before COMEX, and then I cut it off there. That becomes my measure for the average session ranges for London, and it's literally just above Asia high at 409.87. Okay, so that could be a good area to fade some of these moves if that's what we're going to do. Let me have a look at Bookmap now. So I'm just going to remember that price. So that's just basically sub that 410 evens. So I'm going to round it up there because it's a very nice round number there. Now, if I drag over my Bookmap, so I know that I have a highly probable orientation point at 410, okay? Now look at Bookmap. So this is where more granular analysis using Bookmap can come in. You see these red, orange areas. And lo and behold, that's exactly where the orders lie. So these are bigger orders. Now on this particular dome, I don't have hundreds up and down on the price levels. But Topstep X should have that. Although for some of them, I've noticed that they don't necessarily have 100, but they have it for some of the more liquid instruments. Just gonna log in. just maybe focus on just one chart and one dome to make it super clear. All right, let's drag our little London combine here. So 410, we know 410 is a level of interest. So if I go up, even on a regular ladder, what you want to look out for is bigger, sticky outy stacks of orders, right? So here they are, from 09 to 90, and then got it peppered in all the way up to 1060. But the big block of orders is actually sat right above the high of the day. So that's definitely my level of interest, because that's where I have average session range high, and obviously somebody else is waiting to get filled there. All of the other little orders running up to there, they're not that relevant, and they're usually not that strong to give any meaningful reversals. So this is why you want to see thicker blocks of orders that might actually bring some action. Now, what can happen is that you get new orders coming in. They're sort of chasing the market if the price doesn't quite get to an area where we have these longer term orders that have been sat there sitting, waiting. You know how I always say, be less grasshopper and more market stalker? Well, this is what it's all about. So these guys up here, or gals, they're sat there waiting for 410. Right? Now, if we start to get some big news stepping into the market, what tends to happen is that sometimes these guys are going to start chasing. Okay? So suddenly you see them not there, but starting to build their positions closer to the current price as the price is moving away. So they're sort of trying to catch a pullback. And this is where the dynamic nature of Bookmap comes in. It's pretty interesting. You can also have the other side. Sorry, I'm just going to clear my throat again. Again, those frogs have found their way into my throat. So sometimes what you can see is that sometimes orders are sitting there, but then if you have a setup, like let's say we don't have the average session range high there, we don't have the Asia high, we have nothing, and yet you see some orders nicely waiting. But then you get a very aggressive run up to the orders, and then these guys start bailing. They're like, oh God, no, this is not good. So they start to disappear. Now at that point you get this like black area, like you see right in here. So for example, I would say this is a liquidity gap here. There's nothing really much in the way until you get to 0950, and then obviously our major level at 410. So sometimes if they run it up really aggressively to 410, building momentum, people will see that, right? And they are not going to want to go against it. So these orders will disappear, clearing the way for further movement. So that's how I like to look at it. And obviously there are other things, like there's an absorption indicator that you can use. The absorption is visible with your naked eye as well, but there is an absorption indicator too. So if you go to configure add-ons, there's this little thing. You can even make it like do a sound, but I find the sound very annoying. They're like, I'm buying this absorption and it's like a really annoying voice. So I just have it as a visual indicator, and then I will decide whether the level where the absorption of orders is happening is something that I want to see, and therefore we're then expecting a smash in the other direction, so a reversal. So that's like a very granular level to look at what is going on with the real-time order flow. But don't forget that market profile is also order flow, as is supply and demand, as is like stuff like ICT, like all of that is looking at previous orders and how the market reacted with them. And now we're looking at the current price activity and reactions from those slightly older areas, if that makes sense. So I suppose this class is going to be all about order flow on small time frames, order flow on Bookmap, order flow on large time frames, and then trying to put all of that together. Now, I'm going to try sticking with sort of Bookmap and showing you Bookmap every so often if I see something interesting happening. But for now, I have that 410 level pegged as something that remains a level of interest. And right now, I'm not really interested in much else. So I'm not going to be chasing it up and down, you know, and all of that, because I have a pretty decent level coming up. I've also caught myself kind of doing some nonsense trades in between some of my levels. So I want to make sure that I stay on track. Like, trading is always about keeping yourself accountable and staying on track. And I've had some really long days recently, and I think it's definitely affected some of my decisions. Like yesterday, I tried to trade gold, even though I usually check the volatility index before we're going to do that. And I kind of got a bit chopped up. I went and had a nap and then came back and I went, why am I trading gold suddenly? It's like, what's going on? So I went back, like I said, I did the copper trade and it brought my day back into positive. So we are now, or I am now, I don't know why I said we, it's like borderline personality disorder. We. See, I'm always annoyed when people go, we, and it's just them. It's just one person. It's like, who's we? I. So I've had 6 days in a row of positive trading, right? Like I said yesterday, not sure how realistic that is to kind of keep smashing it at 100% winning days. So that will end at some point. Usually I tend to have about 4 days of winning. I mean, recently my biggest run of winning days, I think it was about 6 or 7. And then I usually get a losing day. So I'm staying aware of that. Obviously, I'm going to try and be as diligent as possible to not get, a loss. But sometimes the market doesn't play ball and it's absolutely fine as long as the risk is controlled. But for now, we're doing pretty well. Like, we're up at 155 K for this combine. So let's keep it going. And then the plan is to get an XFA that we'll be using just for London going forward. So yeah, very controlled, very calm. And the stats are, as a result, looking pretty decent overall. The curve is very smooth, obviously, because we haven't had any losing days, right? But also, if you can see, the winds are not horrendously choppy. I don't have one massive day, then another massive day, then one tiny little day, and then another massive day, and then another tiny little day, tiny day. So I don't have that. It's all just, fairly smooth, and that's what we want to aim for to the best of our ability. Now, we all can get into a rut. We could all get into over-trading behaviors, even under-trading, oversizing, undersizing, all of that will play into your performance. And no one's perfect, but as long as you catch yourself doing that, then journal it when you've done something really muppety so that you can stop doing it. The deliberate journaling of your bad behaviors without bashing yourself too much, that's what we want to aim for. Right, let's have a look at some questions here. Is there something you had to do on settings to see the orders? Yeah, so you have to buy level 2. So level 2 on Topstep is $39 per platform, and beware, it bills on the 1st of every month. So let's say if you were to buy level 2 right now, it's the 25th. So you would basically buy $39 worth of level 2 data, and it will only last 5 days before they will rebill you. So if you don't have level 2 data and you want to jump on it, just wait until the 1st and then click buy. Then you're going to have nice full month's worth of level 2. But yeah, you do need level 2 to see these orders, because the chart that we see right here is top of book. That's what it's called. So this is just prices, no order flow, no resting orders, no nothing. It's literally just price as a result of the real-time order flow that we have. Now, a word of caution is that if you are somebody who struggles holding trades and you already have issues with trades running to target without you being in on them, like bailing early, maybe Bookmap is not the best idea for you. So I would still stick to regular price charts, and I would actually go to something like a 15-minute chart, at the very least 5 minutes, right? Reason being is that when you're staring at order flow in real time and you're staring at like 1 and 2 minute charts, what tends to happen is that you get scared out of perfectly good positions while just being locked in to such tiny time frames that you don't see that, for example, 30-minute chart has a perfectly nice strong reversal and it's holding that reversal, and yet you got absolutely chopped up to death by trying to catch everything on very small time frames, and yet very smooth on a 30-minute. Like, for example, if I were to now try and catch shorts and longs on copper on a 30-minute chart, we have a sustained auction up. Like, there's really nothing else for me to do here right now because I am looking for a short due to the strong trend, due to also some experiential data that so far the London attempts at a gap fill have all failed. So I've gone back to see how many times that happened, and it happened, quite a few times. So usually around about in like sort of an hour's time or so, they tend to look for those fades. So just like all of the other days, I'm expecting that I'm going to find a trade towards the end of the stream, maybe even slightly later. But at the same time, I don't want to go into a gap fill because it doesn't have great stats to back it up, right? Now, yesterday, the trade that I took, if you want me to run you through that, was a what I call a weeb short. So weakness inside initial balance, right? Yesterday was an inside day for copper. What does that mean? It means that we did not move to any new levels overnight by the time that London opened. So wherever we spent most of the time on Tuesday, that is exactly where we opened on Wednesday and pretty much chopped around for quite a while. The market created a bearish engulfing. Let me just move this chart to be like more sort of in the middle. Let's try this. Okay, so this is the London initial balance from yesterday, this red box. Now, the market did pop outside of it and went into a failed auction. I was getting chopped up on gold as that was happening. Otherwise, if I did see that, I would have gone into a failed auction. Why? Because failed auctions on inside days open up a possibility for a neutral day type, which means that failed auction is a high probability trade on a range bound day, right? So inside day, didn't move to any new levels, everything is range bound. They try to find business below the initial balance, they fail and promptly bring it back into the initial balance. So as soon as the price started spending time back into the initial balance, that could have been a sign. So if I was looking at that, that would have been one of the trades. But then obviously I missed that, wasn't going to chase. And it came up to the supply that we made during London. Very nice sell-off. In the run-up to the supply, I wanted to see whether the price just stopped moving. And sure enough, I got my signal. So we rejected the supply inside the initial balance, causing weakness in price. This is why I call that setup a weeb, weakness inside initial balance. And then I just ran a short on a pretty small stop. And that was the one that brought my day all the way back to positive. Right, I did run a 3-lot short there because the stop was tiny. Usually I like to use a stop that is on this chart around about 17 points. But this one, I already had a way to limit risk. We rejected supply, right? So now I'm using a newly formed supply in order to go along with it. So that's a very specific setup for Market Stalker's method where I match up the profile, supply and demand rules, and time of day. Okay, so that's time of day is like everything in what I do. If something is happening outside of the time of day, I probably won't take that trade. Like 7 times out of 10, I will be controlled enough not to take that trade. And of course, there's days when I lose the plot as well. Like, that's completely normal in this line of business. All right, let's have a look at some more questions. How do you know if the order is for a buy or for a sell? Well, very easy. Actually, let's go back to Topstep X. Very easy, right? Anything. So first thing to know about the ladder is that all of these are resting orders, resting limit orders. Okay, they're not market orders, because market order is obviously for, for us who enter the market. That's something you can see on time of sales window, but you can't see it on the ladder. So very simple. Anything above the current price is a sell. Anything below is a buy. Now, things like buy stops and sell stops, they can also be resting orders, but usually we cannot, like, the bottom line that I'm trying to get to here is that we cannot know whether somebody is entering the market with a new order or exiting the market with from an old position. That is something we cannot tell, like nobody knows. So when somebody goes, I'm going to sell up at 410, we don't know whether they're selling an old order, whether these are just resting sort of stops or targets, or whether they're people waiting to enter the market. So that's an unknown. Okay, this is why you need levels. You can't. Some people just stare at Bookmap. I'm not really a momentum trader. In fact, if I had to classify myself, like what sort of a trader I am, I would say I'm a contrarian trader, somebody who mainly looks at mean reversions, because in my experience, those sorts of opportunities are always where the money is. So much like Anne-Marie Band, I also like my mean reversions, but I come by my levels in a very different way than she does, and this is why I enjoy watching her and trading with her so much, because she's so good at identifying those mean reversions on NQ, like absolutely amazing. I'm actually going to be on with Anne-Marie on Friday at 1 p.m. CT. That is a sort of a bit of a reshuffle for this week. Usually I'm on Fast Markets for Wednesday, but we kind of swapped some schedules around and then decided that actually me and Anne-Marie should do a little bit of a session again. It's well overdue. So yeah, anything above current price, sell order. Anything below current price, buy order. But at the same time, we cannot know what the intention is behind those orders. It's an unknown. Harsh Patsala says, I'm new to market. What is level 2 data? Level 2 data is basically resting orders and all the stuff that you see on the ladder, right? So something that you don't see on the regular price chart, but you can see them in Bookmap, because that is what they are tracing. They're basically going to the exchange and going, well, where are people waiting with their orders? And that's what's displayed on the ladder, but also on Bookmap in a more cartoonish way, granted, but I actually prefer looking at Bookmap. I know that Bookmap is, a love and hate relationship for many people, but for me, it's been very, very helpful in some of my more granular decisions intraday. Mahi Mountain Outdoors says, what EMA lines or SMA lines do you like to use on the 15-minute? Neither. I do not use the 9 EMA that you will see on my 1-minute chart for anything other than timing the trades. So I know that David Green uses them on a 5-minute chart, but I don't. I have an entirely different set of levels that I look at for larger time frames. And on a 15 and 30-minute chart, they are heavily related to the profile levels and my average daily and session ranges. So for example, here we are on a 30-minute chart. One level of interest that I would normally have is the value area outer edge from the previous day's trading. What is the value area? It's nothing more but the distribution curve, the little belly that we get where most of the business was done. In other ways, where price spent the most time. Now, obviously, if you have a very large trending day like we did have on equities yesterday, that tends to put a wrench in the works in regards to the sentiment for the next day. But there is a way to use the current day's developments in the auction strength or weakness as a sort of alternative, and then maybe just use the value area as a directional indicator. But for the most part, every time we have a very big day, the next day will be an inside day open, and that's like completely useless. It's like, well, great, we have a massive value area, we're inside it. Yeah, like thank you, Captain Obvious, right? And then we have to use something else, which is a TPO profile real time. Auction extensions, auction failures, neutral date type, and all that good stuff to try and sift out what the hell is going to go on for that particular day. But usually we tend to have some hangover days, unless there's like a semi-apocalypse or something, like we had during COVID. But most of the time, if you have a very big day, you either have a massive pullback the very next day, or you have like a hangover day where nothing much happens, and the ranging strategy should take priority on those days. Okay, so Michelle Ryan says, does that above price is a sell? Also the same with Bookmap. No, that was what I was talking about. So the ladder that you see is exactly the same information that is on Bookmap. So if I put these side by side, so putting them side by side, putting this on auto, so you now see some orders are trying to chase this move down. I ain't chasing today because it's Thursday. And I've done 6 days of profitability on the London Combine, so I'm not chasing. But if you see, that's a stack of orders from about 0860. Now these are not as big as the ones at 410, right? They're definitely not as big, but there's a few of them. Here they are. So 35, 20, 34. Sorry, let me just switch off the auto. So not the biggest block, but definitely bigger than what we've got below it, right? So these are all small orders, and then we run into some larger orders here. Exactly the same information, just displayed in a bit more of a colorful way, if you will. So to me, as I've gotten into my 40s and my eyes don't work as well, even though I did have LASIK like 12, 13 years ago, because I was blind as a bat. Let me just put that out there. I was like -6, like totally blind. And then I did LASIK. It was the best thing that I ever did. But now that I'm getting to, like, I'll be 44 this year, it's getting a bit tough. And one of my eyes has gone into slight minus, but my left eye has gone into plus. So it's all just like a little bit discombobulated. And some days when I'm really tired, I'm like, what is that? Like, I'm doing that old person, when you try to read something and then they kind of try and read it from the distance. I caught myself doing that. So yay for aging, guys. It's not very fun. So yeah, sometimes I find it very difficult to like see what's going on, especially with the bright lights. And this is like red. So I'm like, is that an order? What is happening? But Bookmap is really, really colorful. So it's been a total revelation 4 years ago when I found Bookmap. I was like, oh my God, this is so much easier. Here's a very good question. Arlie wants to know, please, Dee, can you share with us how you validate a trade in 1 minute? Your weakness inside the initial balance, how did you manage your timing to enter or sell there? Okay, so what I was looking for in that particular trade was okay, so first thing was that we moved away from VWAP a little bit. So I don't want it being glued to VWAP at that point. Now, I'm not sure I can go all the way back to reliably find what was going on yesterday, but I'm going to try. Give me a minute. This could take a while. Hopefully not too long. So it was around, I think, 11:30, something like that, my time. And what was the price? Yeah, okay. So it was somewhere around this area. And if you look on the 9 EMA blue line and distance to VWAP, it's, it's not close. We've moved away from it. And then what the real entry trigger into that was this big, slightly bigger volume candle that dropped very unequivocally below the 9 EMA to close there with no wicks. No wicks. So I don't want to see any buying wicks to the opposing side if I'm entering a short order, right? So I look for these events. This is the only way I use volume, right? To validate the entry upon it doing something around a level of interest, such as the supply on a 30-minute chart that we created during London, during the initial balance. And then I just look for the validation of the actual momentum stepping in. London is actually much easier to read than the New York sessions because New York has a whole bunch of stuff happening, right? So it's like big candle. Well, actually, it's not a big candle, but it is a big candle. However, the next one is even bigger. So it's very ambiguous and it can be very difficult to figure out what's going on, especially if you're trading NQ or something. But the trade-off is that NQ goes on these like mad runs in like 3.5 seconds. So you can actually grab quite a lot out of it in a very short period of time. And that's one of the reasons why I don't like it, because at this point in my life I'm a lot calmer and I don't need more stress in my life. So I've found myself gravitating towards less crazy instruments in the recent sort of year or so. But yeah, this was the trigger. So 9 EMA to be far away from overnight VWAP, which is something I use for London. And how far, that's now a matter of discussion. But again, I always have another level from a slightly higher time frame. Like I had this supply from the beginning, sort of like the second hour of London. And this is the reason why I run these sessions a little bit later, because that's the time when my setups usually appear. So here you saw that we touched that and then we sort of spent some time around it, but ultimately we had that push below the 9 EMA with a very unequivocal candle, no wicks, no nothing, and then we needed to wait for 1 minute and then it kind of pushed and then eventually just very orderly started to drop. And I did hold it through VWAP. Now here's another thing about VWAP. Sometimes you can have these late entries, but the setup has to be right. I would, like if you see here, this is the crossover VWAP and 9 EMA, and you have this big push down. This is a setup as well, but this is something that I would look for a gap fill, not really a quieter day where I'm doing either a neutral day setup, because that's too late. You don't really have a good way to limit risk. However, for a gap fill, the nature of that setup is that usually it comes with a lot of momentum. So if you can just grab a trigger of something, for example, here we've got price crossing over VWAP and then subsequently getting the 9 EMA crossover as well. But the trigger point would be this. So you have momentum on your side. So it doesn't really matter. You know how Hogue says, I'm entering this trade as a directional move and I need it to go now. That's what he means, right? So it's a directional move. There's no waiting around. But because I was already in this trade, all that I was doing here is just tracking how it's going to behave at VWAP. If it started to amble around it and go nowhere, it was just like very slow, one push to VWAP and then, what are we doing now? I would have taken the trade off. But I saw this strong push and I'm like, you know what? This could actually go all the way down. So I held it past VWAP. And sure enough, it managed to drop even further. Now, after this big push down here, I closed the trade and that was it. And even though we kind of continued to fall, we were getting to NYMEX start. Sorry, not NYMEX, COMEX open. This is copper. COMEX opens at 1:30 my time. And by the time that I got to like 1:15 p.m., 1:20, I'm now at risk of COMEX pushing it back the other way or just, I have no edge there because we don't know what's going to happen. So usually I have a time stop for a later London trade, so depending on when I entered, if I enter around 9:30, 10 a.m., I will typically close that trade by midday. But if I entered around 11, 11:30, I will then hold that trade pretty much all the way to COMEX open, so to the next exchange, or within like 10 minutes, right? Depends on how much profit I already got. So that was a pretty drama-free way to drag myself out and back to profitability from the gold trades. And there's also a reason why I'm being super careful today. I don't even know whether I am going to trade today if I don't find like a super strong setup that matches all of the requirements that I have. So today might be a no trade day for London. So hopefully that clears up how I validate the trade on the 1 minute. Now Sean wants to know, what is a COB and SVP? Oh, right. I don't know, actually. I've never even noticed that. Oh, current order book and session range volume profile. Right. So you have volume profile here on the right. Now, volume profile is something that might be useful for some people. And I do have it on my chart here, but I can control it in a different way. So I can control how much of it I'm going to see, whether it's going to be just a session. Typically for the volume profile, I like to use like 2 or 3 weeks worth rather than just the current session. Because for the current session, the way I do things in my methodology is to use a TPO profile, which is based on time, price, opportunities. But it's basically just a 30-minute candlestick histogram flipped the other way. So instead of having the price movements as a horizontal histogram, it just flips it back upside and then just tracks how we're distributing. Are we having a very thin profile and just going into nothing, into a trend day? Or if we're building structure and we're not going into any new price discovery and just kind of sprinting sideways, that is usually a hallmark of a range-bound day. But for the volume profile, I will typically just do an analysis of where, like I don't use volume profile that much, but if I'm on TopstepTV with other people who do use it, like Robert and a few others, then I will look for low volume nodes and sort of like, I call them holes. So LVN, so here's a big one. So we had basically a hole of nothingness here. Now, typically these sort of areas can behave in a way that the price either goes through them very quickly or just sort of touches them and reverses immediately. So it's good to keep an eye on them, but for me, it's kind of overkill because I already have some other ways to find that on my chart. And for the most part, I'm not going to give that much weight to separate, I'm not going to spend 10 minutes just analyzing volume profile, but I will definitely spend about 10-15 minutes analyzing TPO profile. And you can pretty much see the same thing. I also look at supply and demand on larger time frames, and you can see these areas very clearly where the prices were just distributing and sort of building structure. You can see that with supply and demand. As soon as you start jumping up to some higher time frames, I don't need the volume profile to tell me that this was an area where we had quite a lot of distribution going on. I also don't need the volume profile to tell me that this was a nice drop, ergo low volume nodes. And I don't need it to tell me that we've spent some time here, but didn't spend that much time below this area where we had some wicks, okay? But do consider that I've been staring at supply and demand for 16 years, and I've included market profile in some of my other things that I've developed from about 11 years ago. So I've had day in, day out of staring at this stuff. So a lot of the stuff that I can already see on the plain price chart is kind of like second nature to me. But for somebody who's newer, volume profile might actually help you here because it visualizes the distribution areas much better. Jesse James says, good morning, Dee. How are you? I'm very well. Thank you, Jesse. How are you doing today? Can you explain what your A plus setup is when taking a trade? Much appreciated. So I have a few of those, right? It's not like I just have one. And the reason why I have a few is because we have different market states, different day types, and therefore we need to approach today from a slightly different perspective. For example, for me, a very strong setup, like an A plus setup, would be if I have the average session range high matching with the outer edge of value from the previous day to the, like, sort of coming at it from the downside. So it's creeping back up, going into gap fill. And then for me, gap fills are kind of hit and miss because some of them fill, others not so much. And you can look at edge fold to get like a little bit more data about gap fills. But I'm still waiting for them to bring the session TPOs by session. So until that comes, I'm not going to drag that out because they're working on it. Once we get the sessions, that would be awesome. But the star setup for me is when the session range for the session that I'm currently trading lines up with the outer edge of value area. And then I want to see an extended move in the run up to that area, which increases the probabilities of the ping back the other way. So a mean reversion trade effectively. And then you have the double whammy of mean reversion, not just from a distribution curve from yesterday, but also in regards to the statistical range. Sorry, I said that very weird. Yeah, so whenever you have an extended move in one direction and you can justify two strong levels to bounce off of, that is a strong setup. Anything that involves just a trending move that is sort of falling out of bed and we only have the average session range to back us up, that's not that strong. So for me, that also takes a time of day, very particular time of day. So I don't want to see that happening very early in the session because that's not normal. Like you're not supposed to have the entire average range getting smashed in the first 30 minutes of the open. That means we have a higher volatility range day on our hands. And in that case, the average ranges that are really only for normal days, not the outlier trending days, they should be actually looked at as indicators of a higher volatility day and largely ignored. So you might get a bounce off of it, but then you can use something else to get into a trade, right? And this is where maybe a Bookmap, order book, block of orders on Bookmap, intraday that appears on the fly, that might be a good area to get involved in a continuation short, but not going against it, right? At least not until you've built structure, spend some time in an area. Maybe we might have a fade, but just be very careful how you approach trending days because most people love to be contrarians. And even though I say I am a contrarian, I'm not nuts, right? So when we have a crazy trending day that went through both of my average session and daily ranges, I'm not then going to be like, well, I'm just going to buy this. Right? So I do have a way to stop myself from constantly being a contrarian, okay? And I think that's very important, knowing when to be a contrarian and knowing when we have an outlier day where we need to look for pullback to get in on that move rather than fighting it. So that's one of my start setups. And there's obviously others, but that is something that I look for and something that I will continue, that I will not continue, but something that I will size up on because how many times I've lived through a setup that had those sort of conditions. So outer value edge and average session range, high or low, depending on which side we're going. Renuka says, will you be here live every day at this time? Not every day, but from pretty much. So from Monday to Thursday. I try to take Fridays off for a multitude of reasons. We do like property development and stuff, so I'm frequently not available on Fridays. But yeah, I'm here Monday through Thursday daily, starting at 3:30 a.m. CT, which is 9:30 a.m. London. And this will continue for I don't know, months and months. And, even if I decide to step away from London, I'm pretty sure somebody else is going to take over. So this is a segment on TopstepTV that at the moment I'm the one running it. But yeah, I'm pretty sure if I were to change my schedule or something, let's say in a year's time, we would have somebody running the London segment. It's not going away. So it is now a permanent fixture of TopstepTV. And I'm going to have guests. I'm actually just learning how to do stuff in like video to be able to get guests on. I've already had a few people who mentioned they want to join me, so that would be very exciting. That will be coming as soon as I'm a little bit more comfortable sort of doing this on my own. So yeah, Monday through to Thursday, 3:30 a.m., aka 9:30. So that's Central, and then 9:30 a.m. if you're in London. If you're in Central Europe somewhere, that will be 10:30, I think. I get so confused with time zones because some people are Eastern, other people are Central. I'm in BST, some people are CET. It's like, it gets very, very confusing. Mahi Mountain says, you mentioned failed auctions. How do you identify a failed auction and why is it significant? How do I use it to my advantage? Hog and I always talk about this. This is like a broken record moment. Perhaps we should just dedicate maybe a short for the failed auctions, like maybe clip one of the Hogs ones. So a failed auction is defined as the price coming out of the initial balance range, which is the first hour of any exchange that you're looking at, and then it exits it, but then fails to make any meaningful movement in that direction, and then goes back to close either that 30-minute candle or a subsequent 30-minute candle back inside the initial balance range. That traditionally textbook signals the failed auction. But obviously nothing works 100%, and there are certain subtleties about it. So for example, if you have a failed auction that fails too much and too quick, and then suddenly you're staring at the market that fell deep into the initial balance. So now we're like, let's say 50 ticks away or 50 points away in NASDAQ into the initial balance. There's no way to limit risk. So yes, you have a failed auction, but if you try and get in on it because of the large movement that fell so deep inside it, it's going to be difficult. And it's very likely you're going to get whipped out. So subtleties about entering the failed auction in the right way, that is where the challenge lies. But as the setup, it's nothing more than 30-minute bar closing back inside the range after exiting it. So it has to exit it. I see many people who see a violent reversal during the initial balance. They're like, hey, is this a failed auction? No, we're still inside initial balance. So again, nuance is very important. Sean HP says, how do you deal with price missing your buy limit by a point or two? I don't use limits. I use market orders. Like 97% of all of my trades will be market orders. So I like control over when I enter. And if I'm going to average into a trade, because let's say I'm trading an account where I'm trading with size, that's the only reason I would average. If I want to scale in, I will already have, like, let's say 10 ticks into the zone that I'm looking at as a potential scale-in area. So again, that will be a market order. And then my third entry is usually a more aggressive one when the market moves in my favor, and I deem that I will add some more. But I dislike adding to any positions until such time that you're trading as a default with 10 lots, and then you're just adding 1 or 2 to that whole batch of orders. Why? Because it screws up the average price too much. So unless you're doing it like Dolby, where you're kind of placing limit orders everywhere within the zone and then just hoping for the best that that's going to work out for you. Now, he's done that for so long. He knows what works. I just cannot trade like that. This is where everybody's a little bit different. I would just be so uncomfortable to let my orders fill like that and then just run through them. And he's absolutely fine with the prices, running over the orders. And it's like, yeah, that didn't work. I would just go on a complete tilt. It's like, so everybody's ever so slightly different. But yeah, I don't use limit orders, so that sort of thing has never happened to me. Well, not never. I mean, when I was in the first sort of 4 or 5 years, I was a swing trader. So I did use limit orders back then, but then I didn't have the time constraint. I held my trades for like 2 weeks, up to 2 months sometimes. Intraday trading is a whole different ball game. All right, do we have time for a couple of questions? Daviad says, Dee, if the 30-minute candle closes inside the initial balance on copper, would you short it? No, because this is now an auction fade. It is no longer a failed auction. And in fact, when you start seeing something like this, if it's moved up quite significantly, you actually have a chance for a scalp from the initial balance, aka or VWAP, and then back up to the high of day. So this will be a scalp now. But because I'm trying to not do that, this would be a more dodgy setup, right? It still works, but it's nowhere near like a plus star setup. So I'm not going to be taking that. But if it closes back inside the value, the initial balance, that is now no longer a failed auction, even though it might look similar. It's more of a rotational day. Why do I say that? Because it's too slow. First of all, we moved way past the initial balance, like almost to like 50%. We went above the initial balance, almost 100% of the size of the initial balance. That's a successful auction. So that carries a completely different thing. This is where my setup of an auction fade sometimes can come in. If we had that initial trading idea of hitting 410s up here, right above Asia high, that would have been an auction fade with the take profit at the initial balance high. No more. Because the chances are that if you do have a gap fill, which might happen on some days, we are below value, massively below value, then the initial balance high can be a bounce point. And VWAP is sitting just here, like 0719. So we have a whole bunch of stuff that could cause a bounce, and I'm not very happy shorting it into that, to be fair. So no, I would not short this. This is not a good opportunity for me. And how do you limit risk? Like if you were gonna short, your stop, realistically, it has to be all the way up here because that's where we turned from. And you can maybe look at a very low time frame and try to nitpick over the stop size. But having VWAP in the vicinity of initial balance high, it's not a good market outlook. It's not a star setup. Okay. All right. Final question, guys. If you want to do one more question. If not, we can finish up the session. Okay, World King says, Dee, explain to me where is the initial balance here. So on this particular chart, it's this red, sort of dark burgundy red. Let me actually switch off my standard deviation bands that sometimes can paint over candles and makes it less obvious. Okay, so can you see this now better? Here it is. So that is the initial balance. That is London beginning in the first hour. So this is a 30-minute chart. So we have 2 candles. So that becomes our reference. And on this block MP, the initial balance for each session will be marked as the red box. So if I change the sessions, if I want to go back to see what happened in New York, there it is. So this is its own initial balance. If we want to see where Tokyo was, here it is, Tokyo. Very, very clear to see. This is something that I wanted on my charts. I didn't want some tiny little things on the side. That annoys me endlessly. You can't really see it. So I wanted it nicely displayed so that even a partially sighted person can see something. So that is me right now. All right, let's finish it up for the day. So no trades yet. I am still looking for the right setup in copper. Obviously, if I take something for London, I will let you know on my Twitter so you can track it. I will keep posting my stats there day after day, how things are developing, what trades I'm taking. But yeah, it's not looking like my star setups are coming in here. But you never know. You know, we still have like 2.5 hours before London and COMEX and, you know, US starts to mix in. So we might find something. We'll see. Until then, enjoy the rest of the programming, guys. Don't forget, we've got fast markets coming up later on, and we've got some new segments. Obviously, we have Dakota, who is doing an additional Sunday stream now. So he is streaming 6 days a week, I think. Like, good on him, man. Like, I hope he doesn't burn out. I've always said that. So get your sleep, man, if you're watching. Anyways, trade well. I will see you guys next week because I'm not doing a live stream on Fridays. I mentioned that before. So I will see you guys. Well, actually, I'm going to do I'm going to do, I think, the strategy lab with Anne-Marie on Friday at 1 p.m. CT. But London session is coming again on Monday. So have a good weekend if I don't see you until then. And we're going to do all this again on Monday. Take care, and thank you for watching.